Okay, so this week may have affirmed my theory or helped to affirm my theory on what's happening with the market. So let's just kind of take a look. If you didn't see last week's video, it's the very end. I talked about my theory with regards to David Hunter's melt up and that this during COVID, and we're looking at the chart here, this is monthly, this area here was not the bear trap because it was a special cause caused by COVID, that if COVID had not happened, this thing would have continued on up. And I think what we're now getting is the completion, the bear trap that they called this here, and that David Hunter's prediction will get there. Now, I think once we clear 36.4, it looks like was the all-time high. That certainly would help affirm it. Um, you know, we've got potentially a little bear flag here working on the monthly. Let's see what the weekly looks like. Yeah, it's a little more convoluted, um, but it was actually a an affirming week. Not so much on the Dow Jones, but let's take a look at the SPY, where we kind of came out of this mini downtrend, cleared it. This is on the daily chart. We cleared it on Wednesday, big candle Thursday. Friday, we had a little bit of a pullback, which you might expect after a run up like that. So and there's some volume here, not, outrageous, but it's above average, which is the blue line here. And, it pushed on through that particular barrier. Now, continuation, yeah, I'd like to see it get up here. I'd like to see it clear the 430. And then obviously we've got, on up 461 and then 480 ultimately. But you consider where we are. We're on the SPY. We're about 20% below the all-time high. It's probably not even that. Just kind of measure it here. 13%. Sorry, my math wasn't very good. But anyway, there's nothing on here. Higher highs, higher lows, higher high, higher low. We just cleared a higher high here, and it may continue on up. We may have a small pullback, but as long as it doesn't go below this, I'm still optimistic. This downtrend line at roughly 414. So, you have to make your own decisions on these things. I'm just saying that it has merit, and I don't think packing it in at this point, for at least me, is not the right thing to do. So, yeah, again, make your own decisions on these things. Let's see the Qs. Tech heavy Q, same thing. We had this. The Dow that led us up at the beginning, now it's just kind of meandering along here. Maybe you could do something like this, and then something like, I don't know, something here. So the decision point on the Dow on whether it's going to go up, see if it follows the way of the SPY and the Qs. We'll see what the price action it takes us. If you're going to trade, you got to trade with the price action. Okay, the dollar really made it rise up now. David Hunter and had predicted for a while. I think he's looking at maybe getting back up into this no-go zone. We certainly don't want it to get above 105.63 ish, but it may still head up. a combination of things. One is if the Fed winds up going another quarter point. I don't think they will, but they talk a tough game. At least they did with all their talking heads this week, the board members. So see what happens there. But even then, expectation is if it does run up here, it gets rejected back down. That's at least the prediction. The 10-year, the yield went up. Again, David Hunter's predicting we could get up here around 3.94%, somewhere up in here. We certainly don't want to go through it, at least not very long. Something like this might be okay, but you certainly don't want to spend any time up here if there's going to be a melt up or getting to all-time highs first. Crude just kind of hanging around, around $71 a barrel. Expectation again, this begins to roll back into the low 60s. And then the VIX still staying low, is up a little bit today because the market was down, but the market last 2 days, pretty big move. Both days, but especially in the SPY and the Q. So that's kind of the look of, the theory associated with what's going on. Now, the calendar basically was, on Monday we had the New York Empire State Manufacturing Index. It was down 31.8. Again, the economy, is it going to collapse before we get to all-time highs? It could. I mean, there's definitely the possibility. Matter of fact, you listen to most people, that's what they're going to say. You listen to Gareth Soloway, you listen to Christopher Millian, and Don Durrett out there. All these guys are all saying that it's going to drop, that the charts don't look good. And they may be right. But right now, if we are at the end of the cycle, like David Hunter says, and I'm looking at that monthly data, I'm not planning on it, at least right now. And I could be proven wrong tomorrow or Monday. Retail sales were forecast to be up 0.8%, was up 0.4%, again weakening. Autos in line, industrial production a little bit better than expected. All this was on Tuesday. We have on Wednesday we had the mortgage rate came in a little bit higher. My expectation again is we'll move a little bit higher here in the short term. Like I said, if the 10 years go into 3.9, this is probably going close to 7% or so. And building permits a little lighter than expected, again showing weakening. Permits down 1.5%, which is a little better than before. Starts were a little bit better, showed some improvement, but again, some of this is seasonal. In line on the housing starts here. Philadelphia Manufacturing Index expecting a decline of 19.8 was a decline of 10.4. Initial jobless claims came in a little better than expected, with 254 being the expected, 242 was the number. Existing home sales down 3.4%. Again, sign of weakening. And then, I listened to Powell's speech this morning at 11, and it was kind of, I don't know, he was on with Bernanke, so there were a lot of comments flying. It was kind of funny on Twitter. But anyway, no, I didn't find anything he said to be particularly eye-opening. If we look at next week, again, we have the bunch of Fed speeches on Monday. They're going to say how they're going to raise a quarter point, and we'll see what happens. I still believe the expectation is they won't. Now, I'll caveat that with when we get down to some of the things that they're going to be reporting on. Tuesday PMI, certainly be an indicator. 52.6 expected. New home sales, what does that come out? It's supposed to be a little bit weaker than the month before. Building permits, see what that comes out. It's supposed to continue to weaken. We'll get FOMC minutes and some of their conversations, and initial jobless claims again comes out. What else do we have here? Really, it's all going to come down to Friday, where we'll have durable goods, which could move things. It's -1% as expected, but it's PCE. Right now, we've seen some declines in Europe in some places, but this is going to be kind of the market mover of the week. So 8:30 on Friday morning Eastern Standard Time is when we'll have the biggest news for the entire week. Now we looked at let's go to the investor sentiment, and it actually improved a little bit. And again, it didn't include Thursday or Friday, and might see more bullish, but it's kind of funny, you had a decline in the bearishness, but you didn't have more people get bullish. They got more neutral, which I think is kind of funny because, again, got most of the people on the boat on one side saying they're expecting things to collapse, and that'll be kind of my final comment once we get to it. The fear and greed index, people are getting greedy again. Last 2 days were nice. I think everybody was kind of expecting a pullback today, and so they got just a little bit of one, not a huge deal. So my final comment has to do with, kind of what's happening here. And if we look at these markets, and there's something called the MaximumPain.com, and excuse me, this is looking at maturity dates of options. And so I put option basically as meaning you're betting that the market's going to go down. Call option, that the market's going to go up, or in this case, the underlying being SPY. So if you look at 519, look at all of and this is expiration today. And let's see, 418, what did the market close at on SPY? Let's go back here for just a second. Guess what? Maximum pain, 418.62. Look at this. The maximum pain, 418.11, and it closed today at 418.62. So everybody, below, thinking it would go a lot lower, these all got slaughtered. So, it's it didn't get down. Now, when you look ahead, let's look in June. Okay, June expirations. Look at all the puts that people have. Maximum pain at the moment, 406. Oops, did I read that wrong on 519 or for today? Oh, 410 was the maximum pain. These aren't aligned. 410, and it finished at 418, so not too far off. So just so I can bring this up here so you can see. So 410 was right here. Okay, let's look at. We're looking at June 16th was next big expiration. Lots of puts, right? People expecting the market to go down and not so many calls. So let's look a little bit further ahead. Let's look in July. Still. So this market is set up, you can tell, not only are people saying that the market is going to go down, but they're placing their money there. And so that makes David Hunter the contrarian here. And so there you are with the SPY. We're the boat's loaded on one side here. And, maybe some of these get hit during the course of the month. When we look at, all the way to July, maybe it does, go back down. I'm just not there. at this point. Again, I trade on price action. Let's look at the DIA, which is the Dow Jones um, component that you can look at. And today, again, lots of puts expired out. June 16th. Not quite as crazy as the SPY. Let's see what July looks like. Yeah, a lot of people 270. Look at all these. So it just kind of gives you a sense of, with so many puts out there, the issue will be is the market goes up, so you've got to close these, right? And if you close them, that's going to add more fuel to the fire for the market to go up. Now, if it goes down, then the reverse is true. People are trying to be getting out of calls, but right now that's everybody's loaded to one side of the boat. Going back to the SPY, S&P 500, just look, 130,000 contracts of open, or 130,000 open interest. I don't know. So anyway, just looking at some of these things kind of give you a sense that the contrarian are the people that are expecting the market to continue to go up, and everybody else is pretty much into the puts that are out there. And hopefully you can see well enough, but these are red here, and green here, which are calls. Red puts, green calls. So anyway, that's what I wanted to cover this week. It's been an interesting week, and I'm curious to see how this plays out. We'll know, I believe we've cleared at least one major. There'll be more moments of truth. Let's face it, with regards to the market. It could revert back next week. There's a number of things that could happen. But right now, after Wednesday and Thursday, we had some momentum plays up, and we had, the expiration of a lot of these puts. So, I think to say, oh, it's going to go down 20% right now, like a lot of the talking heads, that are out there, they could still be right. I can't say that they aren't, but, I can see easily how, a lot of people are going to have to cover their shorts or their puts, in this case, in the market, and that just adds more fuel because they have to close them out as the further they get away from whatever their put, where they were, or if they have just plain shorts on them. So anyway, that's what I want to cover this week. And remember, there is always a better way.